don't even know where to start. I have seen everything. And when I say everything, I mean from OnlyFans to liquor stores. I have seen everything on business.
That's like client gifts, right?
It's not a client gift 5 or 6 times a month.
What about your McDonald's breakfast every morning for the last 6 months?
Yes. Oh my goodness. I don't even know where to start.
Welcome to Those Odd Numbers podcast. My name is Jason Snider. I'm the founder and CEO of Main Street Financial Group. We are your fractional finance team.
I'm Summer McFarlen. I'm a CPA and certified tax coach. I'm also the co-owner of Main Street Tax Group, where we do strategic tax planning so you can keep more of what you earn.
I am Masheka Turner, and I am the owner of Bright Skies Business Services. We are your outsourced accounting firm and profit first strategies. And we are here to help you create wealth through your business by gaining clarity around your numbers. So welcome to These Odd Numbers podcast. And today we're going to be talking about mixing business and personal. I know that this does not apply to y'all, but we still going to talk about it anyways. And of course, we have our wonderful hosts, Jason Snider and Summer McFarlen. And so we're going to get right into it.
Yes,
All right. Who wants to start? Summer, I know it's tax season, so I know you got something good for us.
This is going to be a lively conversation, I can tell.
It should be.
Yes.
It should be very lively because talking about it got lively before we started recording.
Got everybody all riled up.
Yes, all riled up. As part of doing the tax return, I go through the client's books, and I've been doing this so long, I know where to look for. It just never ceases to amaze me how much personal things that they pay for out of their business, right? And you shouldn't do that. You should not mix personal with business. And for one specific example that I have, that I almost fell out of my chair when I saw that I was doing a return for S Corp, and the owner literally paid herself, I was like $7,000 or $8,000 for the year, and then $81,000 in their distributions. That was all personal stuff. A, they were an S Corp. B, S Corp has a requirement where you're required to pay yourself a reasonable salary. And I can tell you, for what this person was doing, $7,000, $8,000 was not a reasonable salary. And then I'm like, why are you running everything through the business? So I want to know do y'all experience the same thing with your clients? It drives me crazy because I have to sit down and talk to them, and they're like, oh, we'll do better. And then they don't. I can do it next year. All right, go.
I don't even know where to start. I'm going to try to keep it calm. So, of course, we experienced that. I have seen everything. And when I say everything, I mean from OnlyFans to liquor stores. I have seen everything on business.
That's like client gifts, right?
It's not a client gift 5 or 6 times a month.
What about your McDonald's breakfast every morning for the last 6 months?
Yes.
Gotta be fueled for the day. Gotta be fueled for the
Yes. Oh my goodness. I don't even know where to start. But first of all, one of the things that's always an issue, not only when you're running everything through the business, it is very hard to even see what you even require monthly to take home in the business, because you have everything running through the business. And I hear people say all the time, going back to what you said, I only pay myself $2,000 a month. And it's like, when we look at the cable bill, the light bill, the daycare, everything that came through this business, no, it looks like you need about $7,000 a month. So a lot of times you become very disillusioned with what you're even paying yourself monthly, because you're doing so much through the business. So the first thing that we always do first, I'm always going to bring it back to bookkeeping. We get the books in order so we can see what's actually happening. And the first thing we do is we go through there and see what are you required to be paid monthly? Because if you say my bills are $5,000 a month and I'm fine with being paid $5,500 a month, first thing we're going to do is really put that into practice, because it's impossible to manage your cash if you do not have set amounts on what you're paying yourself. The thing about it is, the whole profit first premise is we're taking our profit off the side, And so we have an understanding of what that percentage should be. Just like we have an understanding of what that percentage should be, we need to have an understanding of what our take home pay is. What percentage? Because if you think it's 10% of revenue, but it's really 12%, if you think it's 10%, but it's really 20%, that is going to make a significant difference in your cash flow. So we see that happen all the time where people run out of money because that is unchecked. So the first thing we're going to do is get some parameters around that. And of course, it's your money and you can do whatever you want to do with it. But when you bring order to your finances, so many remarkable things happen.
I'll add some more to the fuel to the fire, if you will, for today's conversation. Like I mentioned, the McDonald's, we once had a client who wanted to deduct his McDonald's breakfast meal pretty much every morning because he was he was a field salesman for his independent distributorship of fuel additives. And he thought that, oh, it's part of meals. Are you meeting anybody? Why is it every single day? And someone probably knows this a little bit better than detail than I do. We're not there to audit it, but just providing some guideposts. So if they ever get an audit, that they didn't say anything about it. He said it was okay. And some light diligence around it, and maybe even heavier now when I practiced tax, which was almost 10 years ago. But yeah, there's stories like that of the assumptions that's part of a business expense. There is a lot of code. There's a lot of case law out there in the tax arena of what's deductible and what's not. And Summer and Masheka both have mentioned around S corps that tends to be the biggest area of misbehaving, I would say, out there. And it can get you into some significant economic trouble with the IRS or state taxing authorities if it's not done correctly. And so that's why we're pretty adamant. We don't want you, the client, getting into trouble because you heard, and especially these days, from some of the online sources about what you can do. I think our favorite term internally is the TikTok accountant. I heard you could do this, or I saw you could do that, and talk with your tax advisor before you make any significant decisions about what's on there. But on the bookkeeping side, we see it quite often where they're mixing in a lot of personal expenses. Thankfully, a lot of our clients take our advice on that and don't try to do that. If we don't have clarification that it's okay, we just put it into owner draw account if there's no clarity on exactly what's happening, and then let the tax advisor know that, hey, that's the characteristic of those transactions. You decide what you need to do with it for the tax return. But we've thankfully got a lot more adoption from our clients and not trying to stretch and pull and be a Gumby and try to reconfigure tax law to their own advantage and things. But yeah, I've seen some pretty outrageous requests, especially when I was doing the taxes, usually around the Schedule Cs. I didn't have a lot of friction on the S corp side of it, especially after I explained some of the potential penalties that could be coming their way if their interpretation and application of what they wanted to file got reviewed with more diligence than what we were willing to do at the time.
So you're throwing it on the tax person.
I think they didn't. I was a tax person, so yeah.
Oh, so you have to do it.
So I had to push them or remind them, and in some cases they just didn't have anybody that they could trust and things at that time. So at that time I was new to at least the tax side of things. It was to get my chops. I had to spend some time in some more national chains and things, and so they didn't provide a lot of guidance.
Yeah, those national chains won't do that.
But I did it on my own when I saw clients, and I never had, knock on wood, I never had an audit or review. In the 3 years I was there, I never heard that any of my stuff was getting, and I stayed in contact with the owner. So it gave me some confidence I was doing things somewhat accurately.
You're diligent, Jason. I'm sure.
Yeah. I'm actually glad that you mentioned the internet accountant because
TikTok accountant.
Oh yeah, the TikTok accountant, because it's some people end up in a mess with that. I was just talking to somebody this week. First of all, their activity and their income always was a wash. So he didn't really make anything. And he was a C Corp. And I was like, okay, who told you to do that?
Why are you in business anyways?
Right. And I said, long story short, you are spending a lot of money in fees. There's a whole lot going on here.
For nothing.
And he just said, they said I could do it online. And of course, it was the same thing. We're mixing in business, mixing in personal. And it was just a lot going on. And he said online, because one of the things is online, what happens is there's a lot of half truths. So some things you can do, but you need the full story and the caveat. That's where the devil's in the details.
Apply in every situation.
Exactly.
For those of you who are just listening to the audio version, Summer was plugging your ears during the description. But we're trying to reduce trigger experience, given that we're still in tax preparation season. This is being done before April 15th.
But taxes are hardly ever a one size fit all.
What?
I know, right? Who knew?
Not according to all that TikTok, YouTube, and Twitter, or whatever they call themselves, the content.
And I feel like it's calmed down a little bit. I feel like in 19 and 20, it was a frenzy. But I do feel like people have probably gotten burned and had to pay out a lot of money. So, I feel like it's calming down a bit, or at least on my algorithm. But at one time, it was rampant.
A couple of those people, the TikTok advisors, the information that they were giving was actually illegal, and they have had to go to jail.
That explains why it's calmed down a bit.
Yeah, it could be. Oh, maybe you're liable for that information you're spewing. Yes. And I'm worried in the future. I've heard a couple of stories. This is a total track. I'm off topic. But anyway, a couple of stories just in the past week about how people are so disgruntled with the government that they are checking the box that says they're no withholding. So they're not going to pay their taxes. And I don't even want, oh my gosh, that is the biggest can of worms you are about to have slapped on you for not paying your taxes. You're going to end up with a huge tax bill, penalties. If it's proven to be tax evasion, you're going to go to jail. So I don't know. I understand. I'm not very happy with our federal government either, or my state government, but that's a really big thing. Don't want to tangle with the IRS.
And I get it, but I'm like you. So this is the deal. You're going to pay those taxes. You either going to pay them with some penalties and fines on top of them, or you're going to pay them when you're supposed to pay them. But you're going to pay them.
You're going to pay them. And if you want to get your taxes down, work with it. So your expenses and your income are properly categorized, and then work with a tax preparer, CPA, or EA that is also a tax planner, right? So that maybe we could help you get that tax bill down through some other avenues.
That's it. But you're going to pay them. So it's just a matter of how you're going to pay them. But you are going to pay. And then not only that, you cannot beat peace of mind. And because this is the thing, even though people may act bold and say, I'm not going to pay, there's a lot of stress comes when something like that is looming over your head. And not only does it affect you, it affects your family. It affects your buying power. It affects everything.
Your business and your people that are in the business, assuming that you have employees and things. And when I think you made another point earlier, Masheka, about Profit First, one of the patterns I saw before knowing about Profit First, which was around 2019, in my prior work as controller, tax preparer, bookkeeper, I've observed a lot of behavior around tax decision making is around where cash and availability to pay those taxes. So for a couple examples, one is the idea that, hey, I could just go borrow a bunch of money, spend it, and then, yeah, I got this asset I can depreciate. So it depresses my tax for a year, but then nobody explains to them, or they ignore it probably. Depreciation recapture when you sell that asset. The cash impacts on the business. You can see the pattern right away, at least when I either review the tax returns and or their bookkeeping, I can see the pattern there. And usually I can see as well when they've had different accountants over the time period. I can see the different pieces of advice on how things are recorded, what the decisions around certain asset acquisitions and things like that. So it's observable, but it all comes around not having cash available in, I'd say, about 80% of the poor decisions around taxes. And the worst ones are ignoring payroll taxes or thinking that it's your money to play with in the meantime. That's a couple of things around that. One is, even if, like Masheka was saying, around you're going to pay it one way or the other, or you're going to pay with fines, but there's a third option, and that's go to jail, and then you pay after you get out of jail. It's
Right.
one way or the other. In trust fund liabilities, which is what payroll and Medicare taxes are,
Yes.
do not get wiped away through bankruptcy. They follow you all the way. The only way you can get out of those is death. It's the only way. And they extend beyond the corporation. They S corp, partnership, etc. They extend beyond to the decision makers.
Yeah, they track that back to the owner.
So those are one way or the other you're going to pay it. So it's, you might as well get it out of the way and do it correctly and have a system in place like Profit First to make sure you have the cash available for it, so that doesn't become the motivating factor and having to make some maybe dicey decisions that affect those things.
Absolutely. And well, one thing I want to say too, let's circle back around to payroll real quick. First of all, payroll taxes, that money is not yours.
Yeah.
You took it out of your employee's check. Now you do have your portion to pay. So most of the time you have to think about it like that. And Summer fact check me, but I think you only have 72 hours to get that to the IRS once it's been deducted out of the paycheck. It's not a very long time.
It depends on what your liability usually is and stuff like that. But I always, just as a rule of thumb, if we help someone, we don't do payroll, but if we have them go to Gusto or ADP, they're going to take it every time payrolls run. And that's just the best business practice.
Right. But get a full service payroll provider, let the money come out, get a payroll bank account, let the money, if they say you need $5,200 for payroll, put the $5,200 in there and let it roll.
Yep.
Because that's always going to be the best, because you don't need to worry about payroll taxes. You just don't want those problems, because even if there's an issue with the payroll provider, you, the business owner, are on the hook for the payroll taxes.
Yeah.
You're on the hook. So that's why you always want to do a payroll provider and making sure that those taxes are actually being filed and paid.
Mm-hmm. I've known a couple of cases too where they haven't made their payroll tax payments, and the IRS has come in and put a lock on their business, so they can't open their business. And they take that very seriously.
So I'm in the state of Tennessee, and the state of Tennessee is notorious for sales tax. And so the same thing with that, we're 9.75. Same thing with Profit First. Look at your weekly sales. Go ahead and put that money in the sales tax in the sales tax account, because it's not your money anyways.
Yeah.
Put it in the sales tax account, file your sales tax, let it come out. You don't have to worry. Easy peasy. You've taken it off the top.
Speaking of profit, I think you're articulating what we would put in place, which is whenever the allocations are being done on weekly, twice monthly, whatever that time frame is, we have the client look back on what their sales tax that was collected during that period of time, and it gets moved to that sales tax account for whenever they either file the return or need to make the payment. Obviously, it's going to be differing payment schedules depending on likely their liability schedule calculations, and that varies from state to state. So you check with your tax advisor about that, but it's the funding mechanism is the same across the board. Is set it aside as soon as you collect it, and for those running Profit First, do it as part of your allocation, set it aside.
I do want to circle back to mixing business with personal. There is actually a legal term for that.
Ooh.
And it is called piercing the corporate veil, right? Have we all heard of that, but we don't know what that means? I wrote a blog a few years ago about it because it was driving me crazy. I had a couple of people and I was like, I provided it for them as a information sheet about why they shouldn't be mixing personal with business. But when you form an LLC or a corporation, that gives the business owner a legal shield between their company's liabilities and their personal assets. And that shield is called the corporate veil, right? So when it's intact, your house, savings, personal property can't be touched because of business debts or lawsuits. But courts are not sentimental about that, right? If they find that a business owner didn't respect their separation between themselves and their company, the corporate veil can be pierced. So that's where that term comes from. And when it's pierced, personal assets are then on the table, right? So we've kind of joked around a little bit and stuff like that, but it is really a serious thing. It needs to be taken seriously, where you just need to keep your business house in order and your personal house in order.
Yeah.
Yep.
And some of it, I think, comes from, there's a lot of crossover on the tax code between personal and business, in the sense of how things are deducted or what form they end up on. For example, pass-through entities, like S corps and partnerships. In other countries, it's unheard of. I'm not aware of any of the countries I've operated in, primarily China, Philippines, and some in Europe, where that's even a concept, and I have to explain it. And so there's a lot more crossover between business and personal tax filings in the US compared to other countries that I'm aware of. And so I think that sometimes triggers some confusion with business owners that, hey, my home office, I can deduct that. Obviously, there's qualifiers and things you need to do to keep that deduction available to you. It's not as simple as just saying that's going to be there. So I think sometimes there can be some confusion or misunderstanding of why it's so important to keep those things separate, especially on the cash side. The tax side and the cash side of the business are two separate things, and don't want to mix those two either. But I think that's where some of the confusion and misunderstanding comes from, is there's a lot of deductions that flow through to the individual side but are sourced from the business, and making sure it's documented correctly to avail yourself of those deductions.
Yep.
See, we got any other, this is probably one of our longest episodes.
I know it. I think we can probably go more, but we probably
You
might wrap
don't
it
want
up.
to beat the dead horse anymore
I think we beat it enough.
until the next story that comes up.
We got more. We're going to have more stories. Well, let's do a deep dive into entity selection next.
Yeah. There we go. But any last tips before we end this?
Just
My tip would be, don't guess.
Yeah.
If you can't decide whether it's business or personal, please reach out to your professional about that.
Yeah, you don't want a 4 or 5 figure surprise classified expense.
that's it. So just no mixing personal in with the business.
Yeah. And as the proposed title of this episode is Business versus Personal Oil and Water, don't mix the two.
Don't mix.
They just don't play well together at all.
That's it.
Thanks for joining another episode of Those Odd Numbers, and we will see everybody again next week.
Thank you so much.
Bye-bye. This content is for general informational purposes only and is based on current law and guidance as of the date of recording. Tax law and regulations are subject to change. This discussion should not be considered tax, legal, or investment advice. Listeners should consult their own tax or financial professional regarding their specific situation.